something, and I will show you what that would look like. Not to give you hope or anything, more like, I know we're all frustrated by the bear market, and I would be the last person to complain about an upside breakout here, believe me. Yeah, but again, it's mainly so that you know what to watch out for. And so this time, instead of starting with the main thesis, we'll start with how could actually a bullish scenario play out from here. And it is on the chart. I mean, I don't talk about it very often, yeah, but it is on the chart. So I have to zoom out first a little bit. And there is on this chart a scenario in which the correction that played out from the January high 2025 can be classed as a completed structure, an ABC structure which might be complete even, and it could be a wave 4. It would be quite deep for a wave 4, but what we say is normally a wave 4 should normally not break below the 50% retracement level. And this is at $62.42, right? So if we say a correction started up here, that was the January high 2025, and it might be complete, then this would still be not only valid as a wave 4, but also plausible. Yeah, there's a difference. Because we could still go lower, and the orange count, in which we say this might be the low of a wave 4, it remains valid. It remains valid. Because what's the invalidation for a wave 4 in Elliott wave? It is when the market breaks into the wave 1 price region. Now that's too far away to, for me, any break below the 2026 low, so below that $62 level, any break below it would, in my opinion, make the orange count far less likely. That's mainly a labeling thing. Whether I call the current pullback a wave 4 or a wave 2. Look, a market can form a low at any time. This bear market has extended deep enough to be considered a wave 4 or wave 2. It's just that it's a combination of things. Do we have a trend reversal signal? Do we have a break above resistance? Do we see the right response to support? And we don't have that at this stage. However, just wanted to make it very clear, this could be a wave 4 low still. It's not unlikely. It's just not the most probable scenario at this point. I would never show you unlikely stuff, okay? I wouldn't even have it on the chart then. But we need a bullish alternative, a directly bullish one. By the way, in one of the last videos, and you find it on the channel, in one of the last videos, I already explained how the next bull market for Solana could look like. So if you didn't watch that, check it out. I put the link to that video at the end of this video, in case you missed it. But now that we talked about the overall context, because we are still in a bear market, let's talk about how the market could break out from here. And what would be the levels to watch for? What would be the structure that even would invalidate my thesis that we're going to extend this bear market a little longer, possibly towards the end of the year? Well, see, whenever we talk about a possible trend reversal from a long downtrend from a bear market to a possible uptrend, I'm asking for two things. I want to know, do we have a 5-wave move up from a meaningful low? Well, we do have 3 waves up, not 5. So I think we all agree you don't need to be an Elliott wave expert to see that's 3 waves. And have we broken resistance? No, well, we've broken the yellow trend line, but not in a very convincing way. But we have not broken Fibonacci resistance. We have not broken above those highs. And I would need to see at least a break above $94, better above the green line at $98, for a confirmation that we have formed a low. Okay, but even then, best is 5 waves above resistance, not just 3. That's the gold standard, okay? Because after 5 waves up, we can determine a clear invalidation point. That's the 2026 low, and an ideal support area for the upcoming pullback afterwards. That's what we call a 1-2 setup, and then the price can break out, okay? But the problem is, there's really nothing in here that would tell me that we're doing this. It would have to be a diagonal structure. So it is possible, but the initial move up is 3 waves. So I need to see the larger 5-wave move, okay? Which would be highlighted here in orange. So I need to see 3 waves up in one. Okay, done. Then wave 2, wave 3, 4, 5. And until we actually get the 5 waves, it could just be a corrective bounce. That's the problem. Look, had this move up started more impulsive, like 5 waves, it might be a bit different. Unfortunately, it isn't. So that's the only way, from a structural point of view, to get a confirmation the low is in. Then I can say, okay, probably we're starting at least a larger rally, but I would then still call that the wave 1 of a larger 5-wave move. I would want to see if the market can hold a higher low in the pullback, and that would be exactly the support zone that might be relevant for many who want to buy pullbacks. Okay. This also shows quite nicely why a breakout often fails, because if we get 5 waves above those levels and people will scream, oh, breakout, well, that's the point where it will likely fail, because that's the sequence how the market moves. 5 waves in the trend direction, 3 waves against it. And then we should end in this support zone anyway, in this current price region anyway again. Okay. But the difference is then we have a 5-wave move up as a foundation. So unfortunately, at the moment, what we see right now is a very shaky foundation for the assumption a lasting low could have formed. So yeah, I can tell you that my thesis remains we are not yet in a bull market. Further downside remains likely. I will, of course, monitor closely resistance. I always do that. And if anything changes, I will let you know. Before we continue, a brief note regarding our partnership with Bybit. Bybit is currently running a limited promotion for the MCO community. New users, as well as existing users who have not yet made their first deposit, can receive $25 worth of Bitcoin after depositing at least $100 within 30 days. The number of rewards is limited and they are allocated on a first-come, first-served basis. If this is relevant to you, the dedicated campaign link and full terms are available below the video. Now back to the analysis. So, to be very clear, the low that formed in June is likely not the low of a wave 4, and we're likely not in the bull market yet. The Solana chart still moves only up in corrective structures, and the resistance isn't broken, which is between $82.26 and $94. I need to see 5 waves up as per the orange scenario and a break above $98.50 at least for a confirmation that a more meaningful low has formed. In the short term, we can track higher prices because even in the white scenario, we can at least make a case that the market could reach the upper end of the resistance area, possibly $89.40 to $94 before the next leg down starts. So in the short term, especially as long as the price holds above the August low, which formed here around $70.50, higher prices in the short term are possible and actually likely, even in a more bearish interpretation like the white scenario. Currently, the idea is that the bear market is still unfolding, but a 5-wave move up and break above resistance would change that. So, and now we are on the smaller time frame, and this actually confirms what I just said to you. We could move higher in both scenarios, especially as long as these last lows are holding the August low. But here on the smaller time frame, we can be more precise because we have a couple of levels that are a little higher than the August low. So what really matters in the short term is the $74.70 to $76 support area. We're currently testing that. That's a micro support area. This is the very first line of defense for the bulls. And obviously the market moved up from the August low, but has only moved up in 3 waves again. So there isn't really much that confirms an upside breakout or anything. But still, there's a chance for Solana to move higher together with Bitcoin potentially, especially as long as this micro support area is holding. But the more important level for me is actually the red line. That's the swing low from the 7th of August, $72.30. As long as that level is holding, I think in one way or another, the market has a chance to push higher. Below that level, it might even be that the move down to 62 or even lower has begun, possibly even $48, which could be reached eventually. But let's first see if the bulls can generate a larger rally into resistance. But please don't get me wrong. I still see this as a counter trend rally in a bear market, so a bounce that takes place in a bear market. But in a bear market, these bounce moves, these recovery rallies, they fail more frequently, they fail more often. Yeah, it's not a strength